Hello everyone, welcome to Sadik Explains, another informative video. So in this, the Indian stock market has recently declined a lot. Okay, and regarding that we will discuss, like Nifty has been falling nearly 1% on last Friday, marking the fifth day consecutive day of losses. So this drop represents 7.5% decline for the Sensex in the last month. So it is his largest among the global markets during this period. The other Chinese indices comparatively have been around 10% or 8%. Okay, so that's the reason why the FPI, I mean foreign institutional investors, are moving to China to invest there, removing the outflow of FII funds are increasing from India and going towards Chinese market. So we will discuss everything in this video. So before going into the topic, a small reminder from my side that if you're new to this channel, then please like, share and subscribe to my YouTube channel, and also share it with your friends, okay, so that my YouTube algorithm may increase. So anyways, we'll get into the topic. So first, to get into the topic, let me give you some explanation of shares. Okay, what are the shares and all? So shares, they represent ownership of a company. So they are not physical assets, but they represent ownership of a company, and these companies issue shares to raise funds for various needs. Okay, and also this buying and selling of these shares require a broker, a stock exchange, and these share prices fluctuate up and down based on the demand and supply of that share. Okay, so what type of investments we have here? We have equity investments, long term, and also we have debt investments. So these equity investments, they depend on the growth of the company. Okay, these are popular for their uh, good yields. Okay, good yield returns over time. So debt investments are basically very, I mean, low risk, and these are intended for, they are also intended for returns, but they are a bit low risk compared to equity investments. So how these share market work in India? So we have generally two types of two primary stock exchanges. One is National Stock Exchange and other is Bombay Stock Exchange. So Bombay Stock Exchange is one of the oldest and most established exchanges in India, and NSE is the leading stock exchange in India. So who regulates this? SEBI, Security and Exchanges Board of India, sorry, Security and Exchange Board of India, regulates these exchanges to ensure fair practices and investor protection. Fair practices in the sense, like, we have a concept called insider trading. Means the employees of that company will reveal the information, like any updates that beforehand they may reveal it to the outsiders, or he himself may play cards in stock market. Okay, based on that information, if the stock, he knows, right, he knows earlier whether the stock goes high or low. So these kind of unfair practices and retail investors protection, everything will be taken care by the SEBI. Okay, so SEBI is a regulator. So here securities like equities, bonds, exchange traded funds, all these will be used, I mean they all will be regulated here. So yeah, and what is the purpose of the stock market? It is actually to facilitate expansion of business or company by allowing them to raise capital through the sale of shares. Okay, so that they'll get an opportunity for capital, and the investors will get this opportunity for profit from that. If the company grows, then the share, I mean shares also grow, right? So that's how these investors earn profit from them, from that company's growth. So let's get into the market overview. So Sensex has been around 79,400. It came down from 80,000, and the Nifty also declined around 1% in the last Friday. So what is the reason behind this decline? Okay, we have some reasons here. First thing is foreign portfolio investors sell off. Okay, FPIs have withdrawn record funds totaling to 85,000 crore in October only. Okay, and why they are withdrawing? Because to invest somewhere else where they feel that the growth is coming. Okay, if the future prospects of China is good, then they will remove money from India and they'll invest that in China. Okay, so sell off is happening in foreign portfolio investors. But at the same time, domestic investors are also investing in India. Around 90,000 crore, I think so. They have been investing in Indian markets. But yeah, and also we have geopolitical tensions in West Asia, like uncertainties there due to Israel-Iran war. Recently, if you remember, Israel gave this retaliatory attack to Iran through fighter jets. 140 fighter jets went and destroyed the missile manufacturing units in Iran's capital Tehran and other areas. So these, I mean, if the war prolongs and if it escalates, then that may affect oil resources of India, and also Iran is also threatening that it will attack Saudi Arabia. So if that happens, if the war escalates, uh, it is a loss to India, because India's import bill will increase. Okay, the oil prices will increase, right? Then the import bill will also increase. So that will be a loss to economy. So as per, if we consider from the point of view of India, then we don't need war to escalate. We need that area to stay calm. Okay, and also we have another reason also, that Q2 results, quarter 2 results have come out, and they are not as expected by the market. Okay, net profit growth of around 500 companies was slowed down to 4.1% in this quarter. So that is also a reason the market has been has some expectations, right? So the companies didn't reach that expectations here, and also shifted to primary markets. Recently you might have seen that various IPOs have been published, right? The Hyundai IPO and other IPOs. So the people are investing, taking money from secondary market to primary market. Primary market in the sense like IPOs, these are called primary markets. Okay, so they are moving their money to initial public offerings, IPOs. So this may be also a reason for liquidity shortage. So these are all the reasons behind this decline in Indian stock market. And if you compare it with the global stock markets, then India has been the hardest and among hardest hit among the major indices, experiencing this around 7.5% fall. Meanwhile, other indices like Shanghai and Hang Seng, they have surged. Shanghai has increased around 9%, sorry, 10%, and Hang Seng around 3.85%, right? But India has the worst hit of this around 7.5% fall. So, and also there is an impact on small cap and mid cap stocks. Okay, high valuations and liquidity shortage have gave this effect to small and mid cap stocks, and they dropped over around 8% due to high valuations and limited liquidity. And also the individual stock performances are also not good. Many small cap stocks have fallen around 20 to 30%, primarily due to valuation concerns. And also the what is the outlook and future expectations of this market? So that's the main reason why we are watching, right? So market analysts are optimistic about this market recovery that may happen in the next 2 months. Okay, and also despite this short term pressures in the market, the medium to long term growth prospect of this Indian economy remains very very strong. Okay, there will be a very strong growth of Indian economy. So these short term pressures are temporary. Okay, and also valuation suggests that a moderate overvaluation, but not at a level that would significantly deter long term investment. So yeah, these are, so there are future prospects are very good for India, considering India's economic growth. So this is all about this video of stock market, and why there is a very big fall in the stock market recently. So that's it for this video, and if you like my content, and for more content, please like, share, and subscribe to my YouTube channel. I will see you in another video. Thank you for watching till then. Bye bye.